Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning and happy Halloween. Today is Tuesday, the 31st of October. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposit. This presentation is not a solicitation or offer to buy or sell, nor financial advice or recommendation for any investment product. And as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, this is our key gist of our Daily Dose of Market Insight. Will be a recap of key highlights and events that took shape yesterday in terms of market performance in relation with the release of such key events and highlights, and what are the next key data releases to look out for today, and as well as to round out will be the key short-term technical outlook on the broad-based asset classes, ranging all the way from the broad-based stock indices, the FX market, and as well as the commodities market. So before we start, let's have a highlight of what took shape last night on the markets first. So over here last night, the benchmark US indices as well as the European indices, the DAX, taking that as a proxy for the European stock indices, all of them actually shaped that expected counter trend rally. So for those who actually joined us in our Daily Dose of Market Insights on last Friday, we did mention that the medium-term downtrend on the broad-based indices, especially the US stock indices, Dow Jones, Nasdaq 100, has hit a key support level and is being overstretched in the short term, where potentially right now we are in the midst of a short-term potential counter trend rally movement ahead of this very eventful key event week. Why is it key event? Because we have the FOMC meeting, which is out tomorrow, and as well as key component stock release, which is Apple, that is out on Thursday, and most important will be the last ending the week on Friday will be non-farm payroll data. Right, so we're taking things one step at a time and monitor the price level of such movement via our short-term technical outlook. So now let's take a look at what happened on the movement of the US stock market yesterday. If you look at overall, all the component stocks inside the S&P actually closed in the green, so that shouldn't be a surprise at all. Why? Because we already highlighted in our short-term technical outlook on Friday and as well as yesterday to actually potentially look out for such counter trend rebound, which is actually taking shape yesterday onwards, taking shape from yesterday. Okay, so only Tesla closed in significantly in the red at close to negative 5% within the mega cap stocks, but among all the mega cap stocks over here, they are actually lots more positive. But even though the semiconductor sector, which is also a key pivotal sector inside the US stock market, given the fact that why? Because from the start of this year, what we see in that rally in the US stock indices, especially on the Nasdaq 100 and the S&P 500, has been pretty much primarily driven by AI team play, which is the semiconductor stocks. So if you look at the semiconductor stock as a whole, yes, the leader is leading, which is NVIDIA, but within the sector over here is that there are smaller components that are not so rosy. So that actually explains why this particular rally that we see so far that started on last Friday is more counter trend in nature rather than a start of a medium-term bullish reversal. We call it a trend phase. Okay, so now if you break down the performance, what we could see over here is the S&P rallied 1.2%, the Nasdaq 1.10%, the Dow Jones 1.6%, and the Russell 2000 is the weakest at 0.6%. Okay, so with that, key economic data releases on yesterday will be the German growth GDP number. So the flash GDP number came in better than expected. So for Q on Q is negative 0.1%. Markets expecting a worse figure at negative 0.3%. And also the year-on-year analyzed figure is negative 0.3%, whilst market is expecting worse at negative 0.7% year-on-year. So let me enlarge this chart as well, and let me hide myself first so that you can focus more on my screen rather than by my face. All right. So inflation rate came in also a tad weaker. The flash figure analyzed year-on-year, 3.8% year-on-year for October, slightly below 4% year-on-year. Okay, so overall, what we're seeing over here is a kind of a still a risk of a stagflationary environment in Europe. So that will be the case over here, is that potentially it could actually ease off the hawks in ECB to actually to allow them to actually to be more dovish next year. So that actually explain the rally that was seen in the German 30 index, given the fact that a less hawkish ECB will lead to a more potential chance of an interest rate cut next year. So that actually explain that ongoing counter trend rally in the German 30 index. And also what we see yesterday, a pretty much mixed movement on the FX market. And what we could see interestingly over here was there's this report itself. Let me share with you all. There's this Nikkei BOJ report. So this report over here is that was actually released very sneakily during the US session, not during the Asia session. Then don't forget, Nikkei Asia is a Japan publication in Asia, because if they want to publish such news, they should publish during the Asia, but they actually publish it during the US session, during the onstart of the New York trading hours, saying that BOJ potentially may force to tweak policy again, as the 10-year JGB yield is now hitting the upper limit at 1%. So recall that in July, they actually shift the upper limit to 1%. So right now, due to the fact that the 10-year US Treasury is actually on a upward trend, so that actually could give BOJ in a very tight spot to manage their we call it still ultra dovish policy. So in order to actually maintain their dovish policy, BOJ got no choice but to actually allow it to actually increase much higher above 1%, or else they will be stuck in what you call it causing the JGB market a dysfunction market. Why? Because they will keep on continue to buy bonds, okay, because once it hit that 1% level, because that kind of a hard code it at 1%. So now they, due to the fact that and also inflationary numbers in Japan also start to tick up, as explained yesterday in that Tokyo inflationary number for October, that the core rate actually surpassed expectation and surpassed its August year-to-date high at and now it's at 2.7%, which is a 31-year high. So all in all, right, BOJ got to actually be to actually got no choice but to actually increase the upper limit of that current upper limit of 1% to allow more leeway for the 10-year JGB yield to inch much higher. But that being said, over here is that relate to a much more we call it hawkish vibe of BOJ, which eventually saw the dollar yen actually collapse within our expectation to went down below the 20-day moving average. I think at support at 149.40, 149.30. So it traded down below that level. So right now, at any point in time, we will start to see the BOJ release its announcement pretty soon within this hour. So that is something very interesting to actually highlight. Okay, then also out before today will be the, let me refresh my thing. Okay, BOJ decision is not out yet. So 9:30 a.m. Singapore time, the manufacturing PMI data of China and the non-manufacturing data of China actually came in below expectation. So the non-manufacturing slipped down to below the 49.50 level. So it's actually for 9.5 in contraction mode again. Market is expecting at 50.2, and the growth of the services sector, as represented by the non-manufacturing PMI, slipped below September figure of 51.7. It came in at 50.6, also below expectation of 51.8. So all in all, what we could see over here is that if you look at the trend of the non-manufacturing PMI data, the growth trajectory has started to temper off again. All right, so for the October level was 50.6, so it was actually, yes, even though it's the 10th straight month of expansion, but it's the softest within this last 10 months. So all in all, what I could see over here is that the China economic growth is still in a limbo. There's still no signs of a pronounced recovery yet, given the last 10 months of targeted stimulus measure enacted by top China policymakers. So that could actually potentially translate to at least some short-term weakness in China stocks and the Hong Kong benchmark Hang Seng Index, which is the Hong Kong 33. All right. So now with that, okay, let us quickly take a look. What are the key data to look out for today, other than the upcoming BOJ announcement, as well as the release of their quarterly outlook report. So what this quarterly outlook report is actually indicating to us that how optimistic will their inflation number forecast will be. So a market will also focus on the inflation numbers, because given that the Tokyo inflation starts to inch up this month. Okay, so after that, we will start to see the entire Eurozone growth trajectory report. So the Eurozone flash number will come out at 6 p.m. Singapore time later, GDP Q3 flash data, and followed by the entire Eurozone inflation flash data for the month of October. That's 6 p.m. Singapore time. Then that should be it. Other than that, we have the consumer confidence data, which is coming in at 10 p.m. Singapore time. That's for US. So market is actually expecting another lower print from 100 this month, inching down from 103 in September. Okay, so that is the key data to look out for. And for those who are looking at the Kiwi dollar, so Kiwi dollar at early Singapore time at 5:45 a.m., it will come out the employment data on New Zealand at 5:45 a.m. Singapore time, together with the unemployment rate. Then followed by 9:45 a.m. Singapore time, you have the private sector compiled Caixin Manufacturing PMI data. So given the fact that the manufacturing PMI, the official one from the stats boards of China, has gone down into back to below 50 levels, so very likely the Caixin PMI data has been priced in. So consensus, even though it's expecting 50.8, it should be much lower than this number. If it's positive, we're able to have 50, will be very optimistic. So given the print of the NBS number is below 50, so very likely the Caixin Manufacturing PMI may came in to below 50 as well. Okay, so these are the key data to look out for. So now let's take a look at immediately at the chart right now. So going forward, let's take a look at the chart of the FX market first. Okay, starting from the dollar yen. So we call that dollar yen over here is that this is primarily very important. Why? Because dollar yen yesterday we expecting a plunge. So the plunge actually took shape, hit 48.90. Therefore 48.90, it managed to actually did a bounce. Okay, we didn't expect the bounce. So where this bounce can go, because this bounce at this point in time, the RSI, the hourly RSI has started to shape a bullish divergence. So all in all, right, we could start to see a much more, let's see whether the announcement is up yet. Okay, this is one of the news feed. Okay, it's not out yet. It's not out yet. So overall, BOJ at ahead of BOJ announcement, I do not want to have a so tight key short-term pivotal support at yesterday US session high, which is 14980, because it's quite volatile. So I'll still maintain that short-term pivotal resistance level at 150.30 for today, still maintaining that short-term bearish bias on the dollar yen. So heading towards the next support level at 14825. Was 14825 is the 50-day moving average acting as support, and as well as the minor swing low of 5th of October and 10th of October. But however, if we start to see an hourly close above 50.30, then potentially we may start to see a squeeze up again to test the upper limit of the key medium-term resistance level at 150.90. So that's for the dollar yen. So what's next for the dollar Aussie dollar? So the Aussie dollar, still recall that yesterday we have a neutral limit level close to at the 163.95. So price actually reacted off it, and the hourly RSI starts to shape a momentum bearish breakdown, as indicated by the break of this parallel ascending support level at the 60 level mark. So it starts to shape this momentum bearish breakdown, has yet to go down to the oversold region. So potentially in the short term, we may start to see another bout of a push down, potential push down within a impending bullish descending wedge, which is a sideways range configuration that is in place since 4 weeks ago. So potentially 6330 takes down, exposes the lower limit of this bullish descending wedge configuration, which is supporting at 6270/6260, as long as 6395 key short-term pivotal resistance holds. So we will be flipping to a short-term bearish bias condition for the Aussie dollar for today. But however, if we start to see an hourly close above 6395, then this bearish bias condition will be invalidated. Potentially, we may start to see the start of a more pronounced, we call it a bullish breakout move, since if, this 6395 confluence with the upper limit of this bullish descending wedge configuration. If I were to go to the daily chart, you could actually see it over here. Okay, pretty clear, 6395. So hourly close above 6395 potentially could start quick kickstart a kind of a multi-week up move. So in first step, on a very short-term basis, we are looking for a test at the intermediate resistance at 6510, which is the 30th of August and 20th of September minor swing high area. So that's for the Aussie dollar first. So as long as 6395 key short-term pivotal resistance holds for today, we are looking for a potential residual push down within this descending wedge configuration. 6330 support, breakdown 6270, 6260. So that's for the Aussie dollar. Now to the European currency. So let's kickstart with the euro dollar. So yesterday, euro dollar, right, actually broke above our short-term pivotal resistance level at around 62.80. So if I were to go to the daily chart of the euro dollar right now, so on the daily chart of the euro dollar, if you look at the last 1, 2, 3 day of candlestick price action, is rather positive, bullish, shooting star doji, followed by a positive follow through candle yesterday, right at the 20-day moving average, I think as a support. So with that, I will rather have a neutral stance for today. Means neutral means sideways for today, without any clear directional bias between 63.30, 1.0630 to 1.0555, which is the 20-day moving average. So neutral between these two levels. Unless we start to see a clear breakdown below, it means the hourly close below 1.0555, then we could actually reinstate our short-term bearish bias to retest 1.0490/1.0450 short-term support level. But however, if we start to see an hourly close above 1.6330, then potentially this ongoing up move, this ongoing rebound that is in place since the October low could actually transform to a much more, we call it pronounced counter trend rally to retest the 24th of October swing high at 1.0685, followed by 1.0735/1.0760 resistance level. So that's for the euro dollar. Due to mixed element, we'll be flipping to a neutral bias between 1.0630 and 1.0555 for today. Okay, now moving on, next lastly will be the sterling dollar. Sterling dollar, nice reaction of the 1.2180 key short-term pivotal resistance that we keep mentioning on late last week and also yesterday, where it reacted off the 20-day moving average as well as the lower boundary of this descending channel that is in place since the high of 14th of July. So all in all, we'll be still maintaining that short-term bearish bias, short-term bearish bias to seek a retest on last Thursday swing low area at 120.80/120.50, which is the swing low of 3rd of October. Okay, so between this support zone over here. So that is the support level we are looking at. Given the fact that the euro dollar is getting a bit stronger right now against the dollar, so potentially the sterling may not surpass below 120.50 for now, at least in the short term. So this will be our short-term bearish bias support level to look out for today. But however, if we start to see an hourly close above 121.80, then this short-term bearish bias condition will be invalidated to see the start of another counter trend rebound to retest at least in first step to 122.85, which is the swing high of 24th of August /123.30, which is the 50-day moving average, acting as a resistance level as well, which is confluencing the minor swing high area of 11th October and 12th of October. So that's covers for the FX market. So very immediately will be the stock indices. So let's start with the Hong Kong 33. So Hong Kong 33 right now, well, initially we at the start of my presentation, I already presented a bearish outlook. So given the fact that it already coming very close to the short-term support level at 169.80, so I'll be flipping to a neutral limit neutrality level instead over here. Okay, so more of a sideways configuration between 1698 and okay, let me highlight again. This level over here, so between 16,390 and 16,980. So sideways range for today between the Hong Kong for the Hong Kong 33 index. Unless we start to see an hourly close below 1698, then we could validate a further potential drop towards 16,800 level, followed by 16,550 support level. So we'll be having flipping to a neutrality stance on the Hong Kong 33 between 17,390 and 16,980 for today. Okay, now moving on to the German 30 index. So on the German 30 index, price action indeed reacted a rebound of above these 14,520 key short-term pivotal support that we have for yesterday. So no change. We'll be keeping this 14,520 as my support level to maintain this another leg of potential counter trend rebound to retest the resistance level of the swing high area of last week at 14,910 / 14,990, which is the 20-day moving average, coming close to acting as a resistance as well. But however, if we start to see an hourly close below 14,520, then this short-term bullish buyers counter trend rebound scenario will be invalidated to see the continuation of the impulsive down move to test the next support level at 14,360. Okay, Dow Jones Industrial Average, which is the US Wall Street 30. So US Wall Street 30 yesterday surpassed our first resistance as expected at 32,830. Now still hasn't hit that next resistance level at 32,230, 32,340, which is the minor swing high of 24th of August and 25th of October, pardon me, 24th of October and 25th of October, and also the 20-day moving average coming to act as a resistance as well. So given a very steep up move that was seen yesterday on the Wall Street 30 on the 1-hour chart, and also there's exit on the overbought level, but there's no bearish divergence, so indicating more like a pullback rather than a bearish reversal. So I'll be using this level here. So instead of 32,330 as my key short-term pivotal resistance for today, I will have a much more tightened level for prudent risk management sake towards yesterday's US session low at 32,550. So 32,550 will be my tightened key short-term pivotal support level I have for today to maintain the second leg of a bullish counter trend rally scenario. Okay, towards the next resistance at 32,230 / 32,340. Okay, pardon me, it's a bit of tongue twisting given the long numbers that we have in the US Wall Street 30 index. But however, if we start to see a breakdown below 32,550, then potentially this counter trend rally scenario will be in jeopardy to see a retest at the last Friday swing low of 32,320 and even below the next support level at 32,080. Okay, so that's for the Dow Jones Industrial Average of the US Wall Street 30 index. So now moving on, next will be the US Nasdaq 100. So the US Nasdaq 100 going to shape higher high. Yesterday almost come close to the resistance level at 14,450. So we'll be having a much more we call it a much more, okay, because this uptrend, if I were to do the trend line, okay, over here, so I'll be having a much more tighter short-term pivotal support level to maintain this ongoing counter trend rebound to test 14,450 level. So instead of using 13,960 level, I will have a tighter one similar to the US Wall Street 30 to take into account of this push up. Okay, so I'll be using last Friday US session low at 14,140. Okay, I don't want to keep it so tight of yesterday's low because it's just slightly below it only. So 14,140. will be my key short-term pivotal support for today on the Nasdaq 100 to maintain that potential short-term counter trend rally scenario to test the next resistance at 14,450. But however, if we start to see an hourly close below 14,140, then this counter trend rebound scenario will be in jeopardy to see a further push down to test the support level at 13,960, which is also the 200-day moving average acting as a support level. Okay, so this level here, 13,960, the 200-day moving average. Okay, on the daily chart. Okay, so with that, that's sum up for the stock indices. So still maintaining that short-term potential bullish bias counter trend rebound scenario with the acceptance of the Hong Kong 33 index. Okay, so now what's next for the commodity? So let me cover gold right now. So for gold, right, for spot gold, what we could see over here is that price going to trade sideways yesterday, still holding above the Titan key short-term pivotal support level at 1974. So still using 1974 as my key short-term pivotal support level that we have for yesterday. Still looking for a potential push-up to retest 2006, a break above 2006, potentially could see the potential next upleg to test the next resistance level at 2028, 2037. But however, if you start to see an hourly close below 1974, then this bullish bias condition will be in jeopardy. So we may start to see the start of a corrective move to retrace this 4 weeks of rally in first step towards 1957, then followed by 1932, which is the 200-day moving average, and as well as the 50-day moving average slightly below it at 1920. So still maintaining that short-term bullish bias condition on gold XAU/USD at the 1974 key short-term pivotal support level. So with that, we have come to the 28-minute mark already. So with that, that pretty much sum up with the key highlights that I'll cover today for today's daily dose of market insights. So with that, have a great day ahead, and we shall speak again tomorrow. Thank you.